What's up, family? Welcome back to yet another valuable video. Today I'm going to be teaching you how to get sniper entries. So this is a video where I will call it episode 1 School of Sniper Entries, and I traded NASDAQ, and I'm going to use my day-to-day trades to bring a lesson to you. This is gonna make sure that we keep up with consistency in terms of our content, and you are growing daily as a trader from this channel because that's what you subscribed for. So I will show you. I took a wonderful trade, fam. I took a very wonderful trade here. In fact, we did secure about 1:11 ratio over here. So this is amazing, crazy pips to get on an index NASDAQ. So but it does not stop there. I want to break it down for you. I want to teach you how to do it yourself on your chart as a trader. I want to grow you to become an independent trader. That's the whole goal of this channel. So I'm going to jump straight to my chart, and we're gonna break it down. Please do not miss or jump any important information, family. This is for your benefit, okay? And also, if you are watching this for the very first time, make sure to subscribe, like, and also share this video with your friends and family, because tell them Prophetic Forex is the #1 educational channel here in Africa. God bless you. Okay, family, as you can see, we're actually on my 15 minutes chart on NASDAQ right now, and I'm gonna break it down for you. And I'm gonna start off on the H1, family, because this is where I go each and every time when I'm about to analyze. I use the H1, so that's where I'm gonna go right now. And I just want to break it down for you here in terms of this trade. We just want to take our time so we can deliver understanding to really for you to break it down by yourself. I'm going to remove everything here. I might not draw it as neat. I don't have my mouse with me. I'm just using my laptop here and its touchpad here. So, but nevertheless, let's go ahead and just break down structure. So, of course, in the morning, I actually took a buy in the morning on NASDAQ, and later on took a buy during the New York session. And I'm going to show you both. So, let me just show you here. As you can see, it was quite a very strong bearish trend. But what ended up happening on this bearish trend, I'll show you shortly. Now I'm gonna zoom in, okay, and I'll just take my horizontal line. There is this low right here that we can mark, and we can see clearly that the market at this low here, let me just put it straight. Okay, this this low right here was actually violated by the market. That means the market actually just broke into it or swept into it, as you can see with that rejection candlestick, right? So as it swept into this low, many people would anticipate that the market would either do this, where it would pull back and it will continue selling at the last supply or at the last lower high in that case. And of course, I was also anticipating that, but I did take a buy all the way to that high here, there, right? And I took my take profit there. But what ended up happening in this case is that the market actually broke this lower high. Okay, so we must really master structure in terms of terminology: lower high, lower low. So it broke this lower low, swept into it, so took that liquidity, came here and also took this liquidity, which was our last lower high, giving us what we call a change of character. So I'm just gonna list it for you all: market structure shift, okay, as others may refer to it as that. So I'm just gonna take this, copy it. As I said, I don't have my mouse that really helps me to kind of draw these things quite neatly. So I'm gonna just change that label there into chalk, change of character. So as you can see, this last lower high really tells us that there's a change of sentiment in the market. Therefore, we should prepare to now buy. But something very minute that I want to actually go ahead and show you on the daily time frame that already confirmed the bias that we're getting onto this intraday structure. Right now, we already have the market that has played on. But as you can see here on the intraday structure, on the daily structure, we have the market strictly on a bullish trend. It broke higher highs, so it broke previous higher highs over here. Let's try. I may not draw it as nice, right? Okay, so that was a break of structure. The market created new higher highs, and of course when the market does that, we expect it to come back to a demand level. Okay, the last higher low, and of course that's what the market actually came back into when we're trading today. So the intraday structure was aligning with the daily structure, so this was a high probability trade for myself, right? And even the community, the mentorship community, they also took this trade. They made amazing profits as well, right? And the goal there is to produce a trader that has understanding of why they're doing that. So as you can see, this is already playing out on a demand level. Okay, on a demand level. So as you can see, it's playing out on this big demand or daily demand level. Okay, but I'm gonna get rid of it. I just wanted to bring a level of understanding to you about the importance of this trade. So we have liquidity being swept, we have change of character that shows us we're in a bullish trend, and therefore we can actually now go to the M15 where we can now look for our entry in terms of where are we taking our entry, right? So this is where I normally look for order blocks, fair value gaps, all of this stuff in order to take the entry. And one thing that I may advise you to do is when the market has broken structure and it starts to turn around or pull back, you can take your Fibonacci. So I've customized my Fibonacci in many ways, but I'll show you right now what I do. Okay, so there's a nice way of understanding premium and discount markets. So when we're talking about premium markets, we're talking about expensive, you buy it, or rather it's the selling point, and then of course discount, it's cheap, it's the buying point. So relatively as a trader, you want to buy an asset or anything when it's cheap. So we use this to kind of figure out which zones are in the discount when we're in a bullish market and which zones are in the premium market when we're in a selling market. Okay, so in this case, I was not going to take any entry within the premium here that I've highlighted in yellow. I wanted to take anything that is on the discount market. Now, there's also another technique that I use whereby I'm just going to show you right now where I mark zones, the higher probability of zones. So there's a very sweet spot when it comes to zones where we have from 61 all the way to at the bottom there. That is the sweet spot. That's where you actually relatively want to take entries. Right here at 78, that's the nicest. That's where you get sniper entries. And of course, when it starts pulling back, that's exactly what I went for, just to really make sure I can nail this. So as you can see, it broke structure, and okay, and I just want to make it pull back, and it pulled back into a very sweet spot. And then of course the buy started coming up there to take that higher high. As you can see, it now took out the higher high, right? So but how did I also navigate it? So seeing that which zones are here, I began to highlight it like this, guys. I took everything here because everything here, that was the last previous higher low. Okay, so that's what pushed the market up into this whole buy. So since it pushed the market up, that was the zone that I was expecting the market to buy into. But how many of us would not just take buys just like that when there's a very big zone here? You're gonna really have a very large stop loss, and many of us cannot afford such a large stop loss, especially if you're trading prop firms yet you want to capitalize on it. It's either that you want to reduce the risk by your lot size and just enter and just hold, or rather you want to aim for a sniper entry, which gives you more advantage in terms of lot sizing, because you can still stick to your risk parameters, 1 or 2% or half a percentage for the day. And that's why we're so obsessed with getting sniper entries. Not just it looks cool, it is the importance that it allows me to leverage even more on my trade, right? So a way to kind of do this, family, let me just highlight this zone nicely here. A way to do this is you take the same Fibonacci at the top of your zone, okay, and at the bottom of your zone. And also it can really have what we call a sweet spot in terms of anything below the 0.5, that's where you actually want to buy. Sometimes it turns around exactly on point there, but in this case, as you can see, it spiked slightly into it and started going back all the way up. This is a method that I want you to adapt when you're trading large demand or supply zones. You can take your Fibonacci, put it there normally at 50%. That's where it comes in and really marries in into the zone, and it takes off. The deeper it marries in into the zone, the harder it's going to take off, the further it's going to go. As you can see, there was a lot of momentum here that really went up in terms of this, because it really went deeper. It's like when you're on a jumping castle. When you're jumping, the more you go deeper, the higher you go, right? So that's exactly what it did here. It's like old wine. The older it is, the nicer, the more richer it is. And that's exactly what really happened here with this demand zone. When the market came into it, instead of turning around at the top of the demand zone, it actually turned around in the middle. And of course, in terms of sniper entries here, this was the demand zone that you and I were gonna get. So there are a lot of scenarios that I'm going to present to you, but this is just one of them. And of course, how you now do it, you can now put your stop loss right here at the demand zone at the bottom. Others, they may want to put it a bit further, but I just put it over here. My entry should be somewhere here. And of course, as you can see with my screenshot that I've provided even at the beginning of the video, I'll put it in right now. You can clearly see the sniper entry that we got over there. And of course, as you can see, I took my profit at the last high, and of course this got us something like 1:11, right? Okay, 1:11 or 1:8 in this regard over here, because I did kind of make the stop loss a bit smaller, right, in terms of refining it as well. But that part I may not show as much. This is what I don't want to confuse you with a lot of things, but this is what also you can do with demand and supply levels. Use your Fibonacci, go into the 50%, and that's as far as you can refine it. There are 3 ways that I use to refine. I also talk about them in my mentorship course there on our website. I talk about a lot of stuff that can enhance your trading. But of course, if you're still on this channel, you're still watching even up to right now, I do appreciate you watching this video. I hope you took a lot of value. Go ahead and apply it on your chart. Learn. You learn by repetition. You learn by imitation. And of course, this is going to take you to the next level, family. Thank you for watching. I'm your brother in the kingdom, Emmanuel, and I'm signing out.